This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC oil output fell in March due to oil field maintenance in Angola and a halt in some of Iraq's exports, a Reuters survey found on Friday, adding to the impact of strong adherence by top producers to a supply cut deal by the wider OPEC Plus alliance. The OPEC has pumped 28.90 million barrels per day, BPD, this month, the survey found, down 70,000 barrels of oil per day from February. Output is down more than 700,000 barrels of oil per day from September. OPEC and its allies, known as OPEC Plus, agreed to cut production in late 2022 to support the market as the economic outlook worsened and prices weakened.
U.S. field production of crude oil rose in January to 12.46 million barrels per day, BPD, the highest since March 2020, Energy Information Administration, EIA, data showed on Friday. Among the top oil-producing states, monthly output in Texas rose 1.5% to 5.24 million barrels of oil per day, the highest since March 2020, the EIA said. In North Dakota, output jumped 10.2% to about 1.05 million barrels of oil per day, the highest since November 2022. In New Mexico, output grew 1.1% to 1.79 million barrels of oil per day, the highest on record, the EIA said. In the federal offshore Gulf of Mexico, production surged 7% to 1.91 million barrels of oil per day, the highest since March 2020.
Moving on to the top news in the energy sector.
Oil will rebound after recent banking turmoil as demand from top consumer China is set to soar, but worries around economic growth will keep both benchmarks hovering below $90 this year, a Reuters poll showed on Friday. A survey of 45 economists and analysts forecast benchmark Brent crude would average $86.49 a barrel this year, down from February's estimate of $89.23. Brent is currently trading around $80, having been dragged to 15-month lows near $70 earlier this month on mounting worries over the stability of the banking sector. Those fears have since largely been allayed by institutional rescue measures for struggling banks.
The European Commission will extend its gas price cap system to all trading hubs in the European Union from May to prevent potential distortions to Europe's energy markets, it said on Friday. EU countries agreed the cap in December after drawn-out talks over taming gas prices that hit record levels after Russia cut gas deliveries to Europe following its invasion of Ukraine. For now, the cap is triggered if prices exceed €180, $196, per megawatt-hour for 3 days on the Dutch Tidal Transfer Facility, TTF, Gas Hub's front-month contract. Next, we have the top news in metal markets. Copper prices edged lower on Friday but were still up about 7.5% over the first quarter as demand in top consumer China recovered from last year's slump, with many analysts predicting further gains to come. The metal used in electrical wiring hit a 7-month high of $9,550.50 a ton in mid-January but lost ground as U.S. interest rates rose and China's rebound proved less rapid than forecast. Worries that turmoil in the banking sector will hinder economic growth have also pressured metals in recent weeks.
China's top lithium producers agreed this week to set a floor price of 250,000 yuan, $36,380 per ton of lithium carbonate, 6 people familiar with the matter said, in an effort to slow a plunge in the price of the battery raw material. The price was agreed on Tuesday by around 10 companies including Tianqi Lithium and Ganfeng Lithium that met on the sidelines of a conference in Nanchang in southern China, said one person who attended the meeting and 5 others briefed on the discussions. The people declined to be named because of the sensitivity of the topic, which was discussed in a closed-door meeting.
We will now look at the top news in the agricultural sector.
U.S. farmers are aiming to expand plantings of corn, wheat and soybeans this year, the U.S. Department of Agriculture, USDA, said in a prospective plantings report on Friday, as the ongoing war in Ukraine keeps global supplies tight. But adverse planting conditions are likely to trim back the expansion in some northern U.S. states as heavy snowpack and cold, soggy soils could delay spring fieldwork, analysts said. Global grain supplies have tightened to near-decade lows following Russia's invasion of major supplier Ukraine, so larger crops in other breadbaskets such as the United States are needed to replenish stocks and temper food inflation. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.